Hello and welcome back to the Geordie Pig Investor channel. Today I'm going to be going through, is Diageo PLC stock a buy right now? What is Diageo PLC, ticker symbol DGE? Well, Diageo engages in the production and distribution of alcoholic beverages. The firm operates in various categories including spirits and beer. Its geographical segments include North America, Europe, Africa, Latin America, the Caribbean and Asia Pacific. Its principal products include Scotch whisky, gin, vodka, rum, beer, Irish cream liquor, wine, tequila, Canadian whisky, American whisky, and plenty of others. Its brands included Johnnie Walker, Crown Royal, Smirnoff, Captain Morgan, and plenty of others. The company also produces a range of ready-to-drink products mainly in the United Kingdom, Italy, South Africa, Australia, United States, and Canada. It is based in the UK. It is obviously in the beverages industry, has a massive market cap of over 61.8 billion. The company actually went public back in 1952 and it has over 27,000 employees with a massive dividend growth streak of over 24 years, boasting a fairly nice yield at 3.25% with a 5-year dividend growth rate of 4.14% as well. You can see from the graph that over the last 1 year, it has performed pretty poorly, being down 25%. And we're going to go through today if I believe it is a current buy, hold or sell stock. Diageo earning call and fundamental analysis. Diageo had net sales up 9% with growth across all regions. Their volume grew 2% even with implementing strategic price increases, and this also led to an operating profit being over 10%. Their organic margin expanded 9 basic points and are using their strong free cash flow position to fuel long-term investments. They expect to deliver strong free cash flow in the second half of the year and moving into 2025. They are still in the main powerhouse in the majority of the markets, and to add to this, the super premium brands had net sales up over 12%. In particular, they had strong growth in Scotch, up 19%, tequila, up 28%, and good old Irish Guinness, up 17%. The US spirits business is up 44% compared to 2019, with net sales growing at a 4-year CAGR rate of 9.4%. In Europe, their organic net sales also grew by 10%, and it maintained volume despite the challenging economic environment. Their Asia Pacific grew over 17%, despite Greater China only growing by 2% of this. The Latin American industry grew by 20% and delivered the highest margin across all of their regions. Finally, Diageo is actually 36% bigger than what it was before COVID, even though there's been a lot of whispers of people saying that these higher end brands have been crashing since COVID and people are starting to buy the cheaper brands. There's no sign of this across Diageo's numbers. Fundamental analysis of Diageo. It has a positive free cash flow of over 2.5 billion, has exceptional 3-year revenue growth being up over 18% in the last 3 years, has positive operating income at over 5.6 billion, positive gross profit at over 11 billion. Again, exceptional ROE with being over 37%, has really good numbers for short and long-term solvency. It does only have an average debt to equity ratio at 2.0 and an average Altman Z score at 2.32, with average interest coverage at 6.67%, and it does have positive net debt at 17.4 billion. Moving on to actually seeing the physical numbers for Diageo's free cash flow over the last 11 years. The free cash flow is the amount of money a company has left over after it has paid for all of its expenses and any investments it needs to make to keep the company running smoothly. You can see from the graph that Diageo has been steadily increasing its cash flow year on year. It took an expected dip when COVID hit but has since recovered very well, and it is still in a very healthy position. As I mentioned in the previous slide, it is reinvesting a lot of its free cash flow back into the company. So there's no surprise that there was a little drop in 2023, as it has really been focusing on putting more money back into the company for the long term. I may add though, it's still at a very healthy rate, being at 2.5 billion, and Diageo has a very impressive low payout ratio at only 45%, meaning it is likely that it has scope to improve its dividend payments, and it is also likely to look into a lot more share buybacks with their current free cash flow being so high. Moving on to Diageo's discounted free cash flow valuation, this is the first method we're going to look into. The DCF method is a way of looking at the current value of a company based on projected future cash flows adjusted for the time value of money. The DCF valuation process calculates the present value of a company's forecasted cash flow based on selected operating models. Diageo's current price is at 2,760 GBX. And when I plugged in the numbers of a negative 2.9% terminal growth rate and 7.6% discounted rate, we can see that Diageo was worth 1,824 GBX, which would be an overvaluation of 34%. When plugging in the terminal growth rate at 0% and a discounted rate at 7.2%, we can see Diageo actually come at being undervalued 29% and being worth 3,899 GBX. And then when we put in a terminal growth rate of plus 2.9% and a discounted rate of 6.9%, we can see that Diageo is massively undervalued at 80%, being worth 13,704 GBX. By using the discounted cash flow method, also using a valuation called relative valuation and putting the two together, we can come up with something called the intrinsic value. Relative valuation is a method used to value a company by comparing it to its other competitors based on certain metrics. The metrics it uses includes EV to revenue, EV to EBITDA, and PE ratios. What we're going to do is find out the price for the relative valuation, then we can add the two together and we can come up with the intrinsic value. So when plugging in the numbers for Diageo, the worst case scenario came out of being undervalued at 37%, being worth 4,402 GBX. When we put in the numbers for the average case scenario, it was undervalued at 45%, being worth 4,990 GBX. And when we put in the best case scenario, it was undervalued at 56%, being worth 6,222 GBX. So now working out the intrinsic value, like I just mentioned, all we have to do is add the two together and then divide by 2. So I'm going to add the two worst case scenarios, two average case and two best case scenarios together, and then that'll come up with the intrinsic value. Remember, Diageo's current price is at £27.60. So when adding the two worst case scenarios together, we got a valuation of 3,113 GBX. The average case scenario came out of being worth 4,445 GBX, and the best case came out of being worth 9,961 GBX. The final method I like to look into is something called Wall Street estimates. These estimates are an average estimate of a public company's quarterly earnings and revenues that lead to its valuation of that company. These numbers are forecasted by a company-specific analyst who provides research on that particular company and therefore comes up with what they believe is an accurate valuation. There's going to be multiple analysts for companies the size of Diageo, and they're going to be looking at the company on a daily basis, coming up with as accurate as a valuation as possible. These three price targets were all made by the analysts and are all one-year target price predictions. Their worst case scenario, they believe that Diageo would be worth a 2,425 GBX, which would be a 12% downside. On the average case scenario, they believe that Diageo would be worth 3,115 GBX, which is a 13% upside. And on the best case scenario, they believe Diageo would be worth 3,727 GBX, which is a 35% upside. So from this now, we've now got all three of my valuation methods that I like to use when valuing a company, and we can find out the three different prices that Diageo is currently valued at. On the worst case scenario, it is valued at £28.84. The average case comes out of being worth £40, and the best case comes out of being worth £78.84. If you use a 10% margin of safety on the worst case price, you'd be looking to buy about £25.96. And if you use a 20% margin of safety, you'd be looking to buy about £23.07. On the average case price, you'd be looking to purchase it at £36 with a 10% margin of safety, and you'd be looking to buy it at £32 with a 20% margin of safety. And finally, on the best case scenario, with a 10% margin of safety, you'd be looking to buy around about £70.95. And with a 20% margin of safety, you'd be looking to buy around about £63.07. So what does this mean for Diageo? Well, is Diageo PLC stock a buy right now? I think that although the beverage industry has had some recent turmoil, especially the luxury brands, a quality company the size of Diageo will ride the wave out and come out strong on the other side. Having said this, its recent earnings calls showed that the numbers were all moving in the right direction anyways, and Diageo has had some nice growth lately across most areas. If you're wanting a reliable, growing dividend, then this may be the company for you. At its current price, using the average case scenario with a 20% margin of safety, it is still currently massively undervalued, and personally, I still think it's at a great valuation. If you are not looking for a stock that's going to 10x in the next couple of years, this could be the stock for you. At the end of the day, I'm personally a dividend growth investor, and I'm looking for quality dividend stocks that are going to pay me quality dividends payments consistently over the next 10, 20, 30 years. I'm also looking for dividend stocks that are going to be paying me consistently but with good growth rates as well. And Diageo is currently ticking all those boxes alongside the company still having great fundamentals across the board. Personally, I've actually been buying Diageo since the 1st of January every single week, purchasing one stock, and I'm going to be continuing to do so for the rest of the year. This is one of these stocks that I'm actually very confident on and believe that over the next year, it should creep up in price. And even if it doesn't, I'm still very, very happy to buy in at the current price as it is undervalued in my opinion. And I'm happy to reap the rewards from the dividends. I hope you've enjoyed today's video. If you'd like to see any other stocks and want a full breakdown on them, please let me know in the comment section down below. Is Diageo stock one that you're looking into yourself, or have you got different stocks that you may be looking into? I personally really like the British dividend stocks because we pay zero tax on any dividend payments received in an ISA. I hope you enjoyed the video. Please like and subscribe. This is the Geordie Pig Investor, over and out.